Hey everyone, it is Evan here from the Trade Risk on Friday, August 24th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So I hope you're doing well out there. Hope you had a good week trading. It's summertime. We're almost at the end of August already, going to be kicking into gear in September. So hopefully everybody's getting that beach time in, enjoying the good weather while it's here. We're going to jump into markets now with the S&P 500 weekly time frame. This is where we like to start our analysis. This is the cash settled market here, and it was a big week for the S&P 500 because we got a new record closing high here on a weekly basis, on a daily basis in the S&P 500. If we zoom in just a bit here, you can see we finally took out and eclipsed the January all-time highs that have been in place for just about eight or so months now, and the market finally got back up here. It took its time. It grinded up since bottoming out in April. It's been in this very slow kind of slumber to the upside, but the bulls got it done. We closed the week at highs, and we just had our 7th out of the last 8 weeks closing here to the upside and taking out the prior all-time high. So constructive developments there for sure, and continuing really on this weekly time frame. We've talked about the slight divergence here in momentum. So last time we peaked out in January, if we look here just at the MACD, you could look at RSI, you could look at stochastics, you could look at a lot of different oscillators. I have MACD on my chart for simplicity. You can see we topped out way up here. The numbers fairly irrelevant, and you can see we're back up to these highs now at a lower sort of high in momentum. Does not mean we have to just roll over here. Doesn't mean we can't continue to make new highs. Just something to be aware of, that we do have some divergence there in negative divergence there in momentum, but until and if we start to get the more convincing signs of a reversal, then we should expect that this market is going to head higher here. That's what it's been doing. The trend remains higher, and we should give the benefit of the doubt to the bulls here on this time frame, really on all time frames at this point, but certainly this weekly time frame remains strong. So that is kind of the bigger picture there for the S&P 500. This 2872, this pink line on my chart, this horizontal level that was the highs there from January. Let's still pay attention to this general area. Yes, we made all-time highs this week, but again, let's not let's not get too complacent. Let's not just jump all in here. Let's still be aware of the context and understand that we are up 7 out of the last 8 weeks in a row. Next week, that follow-up week, if we saw some type of high volume reversal, again, that would be certainly bearish developments. That's not the ideal follow-up week to new all-time highs in the S&P 500. So let's still continue to measure and monitor those levels, and that 2872 now is something we can start paying attention to heading into next week. So if we go down to a daily chart now of the S&P 500, you can see here we did chop around for the first half of this week. Really, we started off our week right here on Monday. We had a little bit of upside progress. We really tried to get going here on Tuesday. Then we saw this big reversal off of the highs, kind of stumbled around, pulled back a little bit more on Wednesday and Thursday, and then Friday is where most of the gains from the week were achieved here, closing above Tuesday's highs. So we have a bit of a higher low here. That was Thursday's lows. So if you're really active short-term trader looking for those shorter-term levels, 28.54, that's what I'd be paying attention to. Right underneath that, we have this yellow line on the chart here, 28.47. That's where we peaked out or topped out back in mid to late July, and that did that did cause that pullback, and then we eventually broke out from it. So we got this kind of little 28.50 to 28.48, 49 or so, 47, right down in this general area. If you're a short-term trader, that's where you'd want to see the market continue to hold above to remain as sort of bullish and resilient as possible. Now, if we flip this over to the SPY ETF here, I can show you this slightly more, ominous look here for the S&P S&P 500. This is, I think, what the sellers, the bears, are going to be looking at and kind of, mouth-watering, looking to see if this manifests itself. But we sort of have this rising wedge here with diverging momentum. So we have price continuing to make new highs while momentum continues to make lower highs. So when you have this kind of wedge formation here, we got price action getting tighter. We got the higher highs not really getting a lot of ground in between one another, and we're still making higher lows. We almost lost it right here back on the 15th, but bulls stepped in there. That ended up being a nice sort of buyable reversal event that continued this train to the upside. So this pattern here is something that we can pay attention to. Remember, it does not need to manifest itself. It's just something that I think a lot of traders like to look at here, and it's visually sort of appealing and easy to see what we're looking at. So let's pay attention to it. I tend to like horizontal levels of support and resistance the best, but we can certainly project this trend line, pay attention to what's going on here. That 20 that level we talked about around 20 oh boy, what was it now, 28.48 or so, 28.50. If we look at that in the SPY, comes in right around, call it 285, nice round number. If we saw some type of high volume reversal, a breakdown, expansion in range to the downside below 285, that would be certainly a near-term bearish event that would break us down below this wedge, and that might get a bit of a pullback started there if we see that in the markets in the coming week or so. For now, that should not be necessarily our default expectation, as trend is still in the favor to the bulls right now, and they are starting to at least try and broaden out this rally just a little bit. So the S&P 500, whether you look at the cash market, SPY, the levels are pretty clear here. I'd be paying attention. Certainly, if you like this wedge, if you like this trend line, you can certainly look at this lower bounds here, which is only about 0.5%, 1% below where current price is. And above us is certainly all-time high. So it's clear sailing. That's why the path of least resistance is higher right now, because there's no overhead supply. There's no trap sellers. Everyone that was underwater in January has had a chance to sell at a break-even price if they were holding on since that level. And you can see now, so nothing is above us, and that's generally speaking a good thing to trade with the trend and the path of least resistance. So that is the S&P 500 for this week, getting new highs done, setting those records. IWM, same thing this week, breaking out to new highs, resolving this multi-month range to the upside. I think this is probably a more constructive chart to me, or a little more actionable chart to me, as we just went sideways here since the mid-June in the Russell 2000, and now we're breaking out to new highs. A little more energy kind of in this index here that could help fuel this market to the upside. Weekly chart, again, equally as impressive here, as we got this nice new weekly closing high, and you can see we've gone sideways for the past 3 or 4 months. So IWM looking good, looking strong so far. If we saw a sudden sharp loss of 169.75, 160, these recent lows from Thursday, Wednesday, that would potentially put us into a false breakout signal, put us back neutral into this sideways range, but we'll need to see if that can actually happen. So far, bulls are in control. NASDAQ 100 here into the end of the week, shaping up here. Same thing as the SPY. We got that negatively diverging momentum here as the Qs really still consolidates. Hasn't quite broken out here. We didn't get a new record for the NASDAQ 100. Came pretty close, but one thing's for sure is we had the stage set, and this really is kind of a point across the market as a whole, but on Thursday, specifically in the NASDAQ 100 though, in some of the big tech names, we saw these reversals off of the highs, printing these exactly like this pretty much across some of the market leaders there. And I think Thursday was the sort of the setting of the stage for sellers to potentially get that follow through to the downside and really start to confirm this Thursday candle reversal, and it just didn't happen. We got no follow through. In fact, we got a gap higher, and then we took out the highs from Thursday. So this little mini reversal, this little mini kind of preemptive sell signal never really triggered, and we never got that downside follow through, and now here we are pushing back up towards the upper end of this range. So heading into next week, it's the NASDAQ 100 going to challenge its old highs here. We'll see if we can take them out right around, right above price, 50 cents above where we currently are trading. Call it 183. We'll see if the NASDAQ can get through there. On the downside, we kind of have this area here. We found some support here just last week around 178, 179 or so, and that's where I'd be paying attention to for the NASDAQ 100 on the downside. So that is the market environment overall. Bulls continuing to grind this market higher through the heat of August, finishing off almost the month. Next week will be the final week of August, and then we'll kick into September. So let's jump into some other major markets here. We'll go to TLT next, which is also continuing higher. It finished up 1% this week, coming back to the July highs here, and the trend does remain higher. It has covered a lot of ground recently, but it really seems like there's a pretty strong magnet for the TLT to get back up to this 123 level. And chances are, if it comes back up here with a little more authority and starts challenging these July highs, I've got to imagine that it will break through on this next attempt. Again, I have no skin in the game here, no trade on, don't have a setup specifically, but the more that it bangs its head against this 123 level, the more likely it is to break out. So we'll see if that does happen, but TLT is rallying right alongside of the S&P 500. So we'll see if one of those is not really telling the truth, but perhaps, there's been times in the past where we do see rallies in both, so we'll see what happens with TLT, but back up to resistance. Let's see if it can clear through it next week. USO is next. Oil had a nice week, 5.4%, really kind of snapping this. It's been kind of in a lull here the past, essentially the inverse of the S&P 500. It's been down for the past, call it 7 out of the last 8 weeks. It had one green week here. Now we put a second green week in, so maybe 2 out of the last 8 weeks. It is now to the upside, 5.5%. Taking out the last week's highs. Didn't really take out the past 2 weeks' highs, but you can see here it's back up to another tricky zone here. There's a lot of supply in here, just kind of a messy sort of sideways pattern, but I do like the fact that it did recoup and get a nice thrust off of these lows here. So a little bit of a life coming out of the bulls here for oil. We'll see if they can continue next week above this 1465 area. Natural gas did not get the breakout we were looking for here. No setup, there was a setup, no trigger on the trade though. We couldn't quite get through these June highs here. We rallied up and now we're kind of just stalling out, moving sideways. All is not lost just yet. We do have this accelerated sort of trend line that did break here on Friday, but you could still use the lows here from just last week, right around 2380 or so. That could still hold this market up, maybe a little more sideways, bigger sideways kind of range before it makes a move to the upside. That would certainly be the ideal situation, but for now, we're still waiting on natural gas to see if this gets, if this can hold up here, or if this does in fact start to put in a bigger pullback. Finally, the metals, GLD getting a nice finish to the week, almost 2%. All of the gains coming from Friday's session here, and you can see we finally took out and had a green close here in GLD. We took out last week's highs, so a little bit of life coming out of gold. You can see on a weekly chart this pattern is still very sharply lower here. This has been getting crushed over the past couple of months, just wave after wave of selling. So it is good to see a little bit of a reversal stage here. If you're a short-term active trader, you can probably participate here. Structurally, there's still some good damage there, but could be good for a nice little mean reversion type of bounce. Silver, kind of the same picture here. Didn't get quite as strong of a move higher this week. In fact, it ended completely flat, but it didn't suffer as much of a painful sort of downslide as gold did. Although if we take a look here, look how many red weeks back to back we've seen here in silver. It looks like that is what, 10 bars since the downfall here in June. So 10 weeks of selling here in a row in silver probably sets you up, again, if you're real active, to play some mean reversion, to play for a bounce to the upside here as well. I think if we can get above $14, you could get a little bit of a squeeze there in silver. So that is the markets overall. Let's take a look at some of the sectors. Let's see what helped fuel this market to the upside this week. We're going to sort by the weekly performance, and this this week we had XLE. So this is the energy sector coming back strong. This makes sense. We saw a 5% plus move in crude oil. So we saw over a 2% move here in the XLE ETF. And that does negate sort of this breakdown. We had this breakdown session just a couple of weeks, last week in fact, on Wednesday, through this support, through this pretty clear support area. We came smashing down through it, high volume, and then got no follow through, just kind of levitated higher here and reclaimed the support area. So if you're looking for a tactical spot, if you're looking for tight risk here to put your stop, if we can continue to hold above, call it 73.50 or so, I think that would be the ideal situation. And if you believe in this energy market, then it's something to take a look at. So nice save there by the bulls. We'll see if we can hold on to these gains next week. Next up is the discretionary ETF, so XLY. This did hold on to its trend line of support here, got a little bit close, did challenge it underneath it. Again, depends on how you want to draw this trend line, but almost lost it here, ended up recouping itself, and now it is back to making new highs. So XLY, a nice leader here in helping this market move to the upside, continues to be on point, on trend, and recently now breaking out from this sideways multi-week range. Finally is technology. Technology also breaking out here, almost made, let's see, did it make it? In fact, does look like it made 74.28. Yeah, it did make new closing highs here for the XLK ETF here. You can see it move sideways. Really nice consolidation, in fact, from just this pattern right in here. So we just had this nice little, didn't really give back much in terms of a pullback, kind of a little rounded pattern there almost, and then we saw the breakout here. Volume's light, but it is still getting the job done through price action. So nice leadership group there for this week is technology. On the downside, we had staples. Staples down almost 2% on this week, was the worst performing sector. You can see it is still holding up in this trend, this channel, this up channel that it's been in since bottoming out in June. It's holding and back to this lower bounds here. Depending on how you want to play this, you could look for support to step in here again, as it has multiple times in the past. Or if you think this is the time where XLP starts to break down that slope change here, then you'd be looking for that breakdown. We're already down 5 weeks in a row. So for me, 5 weeks down, or I'm sorry, not 5 weeks, 5 days down, 5 days down in a row, generally that is not a period in which I am initiating a new position in that direction. That's just me, but certainly an inflection point here to pay attention to next week. XLU also second to worst performer, 1.5% down this week. 4 days down in a row, had a little bit of a reversal here on Friday. And you can see this has overall enjoyed some pretty nice performance since June. So a little bit of a pullback here. Really can't get too upset with that. It's covered some good ground here over the past couple of months. Kind of very similar to XLP though. We'll see if this can revert higher here. 4 days down, outside reversal day. Sets up nicely for maybe some continuation to the upside. And then finally is financials. Was slightly positive here on the week, but still in the bottom 3 in terms of relative performance here. XLF just has been stuck stagnant in this sideways range since April. It's been trying to, or flirting with this 28.50 area. This has been the highs here since, again, pretty much April, and it just hasn't been able to break out just yet. Maybe next week is the week, but it's something to pay attention to. It's a big sector in terms of the S&P 500, so it will be important to see how this reacts here. Does it roll over back into this range, or do we get some rotation into financials that can finally get this this group kind of performing to the upside again? So that is what I have for this week. Hopefully this video was helpful. Thank you so much, as always, for tuning in and watching. You can subscribe to our YouTube channel every Tuesday and Friday. Is when we run through the markets just like this video, and I hope that you'll come back and watch some more. So that is it for me. Have a great weekend, and I will talk to you next week.